Good morning, everyone. Please let's rise as we take the national anthem if it's safe for you to do so. Thank you. First stanza of the national anthem only. Thank you. Thank you very much. You may be seated. The President and Chairman of the Governing Council, Malam Ahmed Ladan Gabriel, FCIPM FNLI. The Vice President, Mrs. Chidima Obiejesi, FCIPM. The National Treasurer, Mrs. Ogochukwu Egbono, FCIPM. The immediate past President, Mr. Olusegun Mojid, FCIPM FNLI. Elected council members present on this call. The representative of the Ministry of Labor and Employment. Chairman of branches. Chairman Board of Fellows, Chairman Committees of Council, Distinguished Fellows of the Institute, our distinguished moderator, Professor Biodun Adedikpe, Founder and Chief Consultant, B. Adedikpe Associates Limited, our distinguished panelists, Professor Uche Waleke, Director, Institute of Capital Market Studies, Mrs. Joan Wuya, FCIPM, Head People and Culture, International Rescue Committee, Mrs. Omowumi Mabel Adewusi, MCIPM, General Counsel, HR Director, AXA Mansard Insurance PLC, Mrs. Oguguwa Emamoke, ACIPM, Compensation and Benefits Manager, Perfective and Mail Nigeria Limited. Esteemed members of the Institute, non-members of the Institute and invited guests to this program, CIPM HQ staff, ladies and gentlemen, members of the press and all distinguished guests, good morning once again and welcome to the CIPM Advocacy Roundtable with the theme, the impact of the new tax reform on the cost of doing business in Nigeria, holding virtually today, Wednesday, 25th of February, 2026 at 12 p.m. Good morning. My name is Oluwatoyin Naiwo, FCIPM, Chartered FCIPD, and I'm the Registrar Chief Executive of the Chartered Institute of Personnel Management of Nigeria. Good morning once again. May I ask at this time that you all please rise and join me, if you are members of the Institute, to go through and recite the Institute's Code of Conduct. You'd insert your name when you get to I and your membership grade. Thank you. Can we all rise, please? Can I have a couple of people online on the panelists unmute themselves so I can know I'm being followed? Thank you. I hope you can all hear me loud.
Yes, we can hear you.
Loud and clear.
The Chartered Institute of Personnel Management of Nigeria.
The Chartered Institute of Personnel Management of Nigeria,
as the apex regulatory body,
as the apex regulatory
body
for human resource management practice in Nigeria,
for human resource management practice in Nigeria,
is committed to the highest possible standards
is
committed
committed to the
to
highest
the
possible
standard
standard
of professional conduct
of
professional
professional conduct
and
conduct
competency among its members.
and
and
competency
competency among
among
its
its
members.
members.
Therefore, as a member of the Institute,
Therefore,
Therefore,
as a
as
member
a
of the
member of the
Institute,
Institute,
I,
I, Pastor Gabriel Dukitibi of
Mommy
CIPM,
Melody
at all times
pledge
beg
that
that
at
I
all
shall at
times
all times
carry out my duties and responsibilities
carry out
carry
my
out my
duties and
duties and
responsibilities
with
responsibilities
integrity and diligence,
with
with
integrity and
integrity and
diligence,
diligence.
demonstrate competence and ethical behavior
Demonstrate
demonstrate
competence
competence
and
and
ethical
ethical
behavior
behavior
in all my business,
in
in all my
all my
business,
business,
professional,
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 personal activities.
and
and
personal
personal
activities.
activities.
Respect the laws of the land.
Respect
Respect
the
the laws of
laws
the
of the
land.
land.
Promote, encourage,
Promote,
Promote, encourage,
encourage,
and in place acceptable processes
and in
and in
place
place
acceptable
acceptable
processes
and
processes
procedures in the practice of human resource management
and
and
procedures
procedure
in the
in the
practice of
practice
human
of human
resource
resource
management
management
within my sphere of influence.
within
within
my
my
sphere of
sphere of
influence.
influence.
Endeavor to make personal decisions
Endeavor
Endeavor
to
to
make
make
personal
personal
decisions
decisions
after considering all options,
after
after
considering
considering all
all
options,
options,
of which resignation may be one.
of which
which
resignation may be
resignation may be
one,
one,
Defense of this code of conduct.
in
in
defense
defense of this
of
code
this
of
code of
conduct.
conduct,
Where there are conflicts
Where there
where
are
there are
conflicts
conflicts
between my professional obligations
between my
between my
professional
professional
obligations
obligations
and the expectations of my job roles.
and
and
the
the
expectations of my
expectations of
job
my job
roles.
So
roles.
help me God.
So help
So
me
help
God.
me God.
Thank you. You may be seated.
You're welcome.
Thank you very much. With all the protocols that have been duly observed, I'd like to welcome the President and Chairman of the Governing Council, Malam Ahmed Laran Gobrel, FCIPM, FNLI, to give his welcome address. Over to you, sir. I hope you can hear me, sir. Over to you, sir. Mr.
Loud and clear.
Thank you, sir.
Right. Thank you. The Vice President, Mrs. Chidima Justina Obiejesi, FCIPM, the National Treasurer, Mrs. Ogochukwu Egbuonu, FCIPM, the Registrar and Chief Executive, Ms. Oluwatoyin Naiwo, FCIPM, our immediate past President, Mr. Olusegun Majid, FCIPM, FNLI, elected council members on the call, other esteemed members of the Governing Council, fellows of our institute, our distinguished moderator, Professor Biodun Adedipe, founder and chief consultant, B. Adedipe Associates Limited. Prof, thank you for always making yourself available to work with us. Our respected panelists, Professor Uche Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, and member of the Presidential Committee on Fiscal Policy and Tax Reforms, Mrs. Joanne Weir, FCIPM, Head People and Culture International Rescue Committee, IRC Nigeria, Mrs. Omowumi Mabel Adeusi, MCIPM, General Counsel and HR Director, AXA Mansard Insurance PLC, Mrs. Ogugua Emma Moke, ACIPM, Compensation and Benefits Manager, Perfective and Mel Nigeria Limited, esteemed members of our great institute, our invited guests, ladies and gentlemen, good afternoon to you all and welcome to this all-important conversation. There is a popular saying that when the rules of the game change, only those who understand the new rules can still win. Today, Nigeria is rewriting the rules of its economic game, and the question before us is simple, but yet profound. How do we remain competitive, resilient, and profitable in the face of the new tax reforms? Because taxes are not just numbers on paper. They actually influence investment decisions. They shape business survival. They determine employment levels, and ultimately, they affect the quality of the life of every Nigerian. Therefore, today's Advocacy Roundtable is indeed very necessary. The theme before us, which is the impact of the new tax reforms on the cost of doing business in Nigeria, strikes at the very heart of economic sustainability. In an era of rising operational costs, currency volatility, global uncertainty, and shifting regulations, every additional cost carries strategic consequences. The question is therefore no longer, can Nigerian businesses survive? Rather, it is how can they remain competitive, compliant, innovative, and profitable. And that is why conversations like this matter. Apology, there was a bit of a glitch with my network. Policy without dialogue, they say, breeds resistance. But policy with engagement often builds trust, compliance, and shared ownership. At CIPM, our mantra is very clear, and that is delivering value through people. Madam Registrar, please confirm you can still hear me.
Sir, we can hear you, but your video is static. So can we take your video off? We can hear you.
Okay, all right. I guess it's the network. You can take the video off. It will help the bandwidth. At CIPM, our mantra is very clear, and that is delivering value through people. And when we say value, we mean real, tangible, and measurable impact. We will go to any length to ensure our members are informed, empowered, protected, and positioned for success. That is why every month we convene strategic conversations, policy dialogues, leadership sessions, and professional engagements at no cost, so that our members and the wider public remain ahead of change and not victims of it. Because knowledge is no longer power, but applied knowledge certainly is. And in a world where regulations evolve rapidly, ignorance is expensive. So this is my call to all our non-members who are present on this webinar today. If you are here today and you are not yet a member of the CIPM, please consider these your personal invitation to join the League of Professionals shaping, leading, and thriving in the new world of work. CIPM remains the only statutory and regulatory body for human resource management practice in Nigeria. We are chartered and we are licensed by law. We're not just a professional institute. We are the standard setter. We are the regulator. We are the custodian of HR excellence in Nigeria. To join CIPM is to become part of a national movement shaping the future of work, leadership, governance, and people management. So I invite you today to start the journey, shape the future, and influence policy. Let me also emphasize this important point. If you're practicing human resource management without being a member of the CIPM, or if your organization employs a non-certified HR practitioner, you should know that you are operating outside the provisions of the law. All HR practitioners must be certified by the CIPM in line with our regulatory mandate and the law establishing our institute. Please note that CIPM membership is open to all professionals entrusted with the responsibility of managing people across both the public and private sector. Let me at this point, on your behalf, especially commend our distinguished panelists and our moderator for graciously making out time from their very busy schedules and engagements to share their insights, experiences, and thought leadership with us today. Thank you for lending your voices, your intellect, and your leadership to this important national discourse. Permit me to also sincerely commend members of the Public Policy and Advocacy Committee of the CIPM, ably led by Dr. Dasuki Ibrahim Arabi, FCIPM, whose tireless efforts, strategic thinking, quiet diligence made today's session a reality. We thank the entire committee for your commitment, for your selfless service, and for the passion that you put into what you do. We see you, we celebrate you, and we applaud you all. Let me conclude with this thought. In times of change, the greatest risk is standing still. And as another also wisely said, that the future does not belong to those who wait. It actually belongs to those who prepare. Today we prepare. Today we engage. And today we shape policy through dialogue. I encourage us all to participate actively, challenge ideas constructively, and contribute meaningfully to this discourse, because the future of doing business in Nigeria depends on the quality of conversations we hold today. Thank you so much for joining us. Welcome once again to CIPM's 2026 Advocacy Roundtable. I wish us all the most impactful session. God bless you all, and God bless the Chartered Institute of Personnel Management of Nigeria. Thank you very much. Madam Registrar, over to you.
Thank you very much, sir, for those encouraging and impactful address. Thank you, sir. We appreciate you. I'd like to invite Professor Biodun Adedikbe, our distinguished moderator for today, founder and chief consultant, B. Adedikbe Associates Limited, BAA Consult, to kindly take over this session from here. You're welcome, Prof. Sir. Over to you.
Thank you so very much, Registrar CEO. And let me rest on the protocols already beautifully established by our dear President and Chairman of the Governing Council. And also on behalf of the panelists, say a very big thank you to him, and as well as the council members and the leadership of CIPM for having this platform open to us and as many stakeholders as are interested in the topic of conversation today, the impact of the new tax reform on the cost of doing business in Nigeria. I mean, certainly, one can make a statement that goes this way, that this tax reform is perhaps the most contentious among over 30 important policy shifts that we have already recorded since President Tinubu came into office on the 29th of May, year 2023. But yet, in a way, this reform is a fundamental shift that redefines the future of public finance in Nigeria, and indeed, the future of our economy. And I want to say a very big thank you to CIPM for considering this subject at this very point in time and open a conversation. As our dear president said, we are an advocacy platform that enables us to dialogue and also look at what has been done. Perhaps there are some gaps there, maybe also more importantly, interpretation, and how this affects businesses, households, and then the kind of choices you can make in the situation. Now, to put it in context, there are three key elements to this particular reform. First is the structural, administrative, and conceptual changes. And of course, secondly, is to bring very strongly, the argument that taxation as an instrument of national development should not be seen basically as a revenue driver. And that, of course, we take our minds back to what the situation was like before this reform. Counting in terms of number, over 70 different taxes, levies, dues, and all manner of things by government agencies variously across the entire geography. But now the third key element is to ensure that what we do in Nigeria with taxation aligns with global best practices. But then there are 5 major provisions, which I will mention very quickly before we go into the actual conversation. Number 1 is that the reforms have redefined permanent establishment as significant economic presence, which means if we look at Nigeria vis-a-vis other African countries and the rest of the world, and we talk about the ratio of tax to GDP, very, very low. So this is an opportunity to redefine that. Secondly, taxation will now also consider passive incomes and, of course, digital transactions, as is done in other tax jurisdictions around the world. Thirdly, is that there are now stricter rules for shipping and air transport incomes, which means a lot of entities that do business within that space, but of course are registered in other countries, but do a lot of business here, will also be brought into consideration. Number 4 is that the framework is updated for taxi services rendered abroad. And lastly there, in terms of the major provisions, also recognize double taxation agreements. So that said, let me introduce our panelists. Happily, their registrar had mentioned their names earlier, but I'll just give a very brief profile of our panelists. First is to, not in any particular order of importance, but just to mention and recognize the fact that we have with us this afternoon Professor Uche Uwaleke, who is, by the way, also served in the Tax Reform and Fiscal Consolidation Committee. And at times when I sit back and ask myself, how do I describe this man? So, but I did something this time around. I went on ChatGPT and it gave me a succinct summary of Professor Uwaleke as a professor of finance and economics. But I will add to that what ChatGPT didn't say. And that is, he's the first professor of capital markets in Africa. And that we need to also acknowledge. Presently, the president of the Capital Market Academics of Nigeria. And of course, he teaches at the Nasarawa State University in Kefi, specialization public finance, capital markets, economic policy, and development economics. So, Professor Uche Uwaleke, thank you so very much for making time to be with us today to discuss this issue of tax reform and its impact on cost of doing business.
Yeah.
All right. So,
thank you. Thank you so much, Professor Adedipe. Do I have the floor now?
Okay. I will come back to you.
Okay.
I want to hear from you first. Let me quickly introduce the other panelists. Mrs. Joan Weir is of the International Rescue Committee of the Nigeria Country Program. And she's the head of people and culture. And indeed, in terms of area of interest in this conversation today, experience behind the numbers. We equally have Mrs. Ogugu Aimamoke, who is Perspective Mail Nigeria and the Compensation and Benefits Manager. Again, areas of interest in this conversation today, cost implication to companies of high earners, all right? I'm sure a number of our members there and also guests of CIPM will be interested to hear her perspectives on that issue. Of course, the decline in perceived value of salary increment by higher earning employees, then increased administrative tax, especially in managing rent relief, and of course, need for public and granular individual tax education. Thank you so very much, Mrs. Emamoke, for being here.
Thank you so much.
All right, so we have our fourth panelist that complete the team. That is Mrs. Omoumi Adewusi of AXA Mansard. She's the General Counsel and Human Resource Director. Of course, in this convention also, she brings the perspectives of transparency, behavioral change, and of course, economic participation. So that said, we dive straight into the conversation. And I would like to start this way. I will start with Professor Uche Uwaleke, and I will put the same question to all our panelists. Share with the audience here your perspective, general perspective of the tax reform culminated in the 4 tax laws that the President signed in June 2020. So general perspective on the tax reforms, Professor Uwaleke.
Yeah, thank you so much, Professor Adedipe. The President and Council members of the Chartered Institute of Personnel Management, other members of CIPM, distinguished participants, I greet you all. Let me start by thanking Professor Adedipe for recommending me to be part of this advocacy dialogue. I'm indeed grateful. I consider it a privilege. Now, I would like to start with what the President's statement when he was making his speech. The President said that when rules change, that only those that understand the rules, stand to win. It's on that premise that I'm going to, make my submissions. And I also like the theme of the roundtable. It says it's looking at the impact of the tax reforms or the new tax acts on the cost of doing business in Nigeria. And I can say upfront that impact is going to be positive in the sense that at the end of the day, the overarching aim is to create a better business environment, to make our tax laws simpler. So what's my overall impression? I think it's a game changer. It's not something we've had, in many years. The tax laws that we have now, have tended to streamline the myriads of laws we've had in the past, and also to modernize them. You will agree with me that before now we've been operating very archaic tax laws. A good example is the stamp duty. The stamp duty that dates back to 1939, and we've had other laws that are also, out of date. So the whole idea behind the tax reforms, one of the objectives is to modernize our tax laws and to bring them in line, in tune with, with reality. I can also say that another thing that it is designed to do is to make our tax system a lot more progressive. Let it have this quality of fairness. And that is why you have this, for the first time, we're having exemption thresholds with respect to personal income tax. So today, I'm sure some of you must have experienced that. Workers whose taxable income is 800,000 naira and below are now completely exempt, from tax. And when I say taxable income, I'm not referring to gross income. Of course, we know that your gross income is different from your taxable income. So it means that even people who earn as much as 1.5 million naira, per annum, stand not to pay any tax at all. By the time the reliefs are removed, once the taxable income is 800,000 naira and below, you no longer pay tax. And one good thing about the tax law is that it's even made it clear that minimum wage earners are completely exempted. So if tomorrow the minimum wage is raised from 70,000 naira per month to 150,000 naira per month, Okay, the law completely exempts anybody on minimum wage. So that's it. That's one major shift that we're having. The same can also be said for companies. We've also seen the increase in the thresholds for companies with turnover. Now, it used to be turnover of 25 million. Now, turnover of 100 million and assets of 250 million. So those companies too, will also be exempted from any form of tax, whether it is companies income tax, whether it is capital gains tax, and all manner of taxes. So they are now exempted. So and that's why when you look at the progressive nature of the taxes and the fact that most workers are going to benefit from it, you begin to wonder why any worker should be against it in the first instance. So it's important we know that. And something too that the moderator mentioned, maybe I should also emphasize it, it's also part of why we think that this new tax reforms represent a reset, really. And that's the fact that before now, we have multiplicity of taxes. Officially, formally, we have 60 different types of taxes and levies, 60 different types collected by, in the Constitution, they're in the Constitution, by the 3 tiers of government, federal, states, and local government. So what the tax law is seeking to do, especially the second one, the Nigerian Tax Administration Act, is to streamline them into not more than 9. So we're going to have a simpler version of the tax laws now. And that Tax Administration Act also outlaws illegal collections. So going forward, you're not going to see people now carry roadblocks, touts, collecting all manner of levies, because the tax law outlaws even cash collection, when taxes are involved. So it's going to go a long way to help smoothing businesses and reduce the cost of doing business. And then there is also the issue, it wasn't there before, the issue of the tax ombudsman. Before now, if you had any issue with the tax authority, you had nowhere to run to. Okay. Apart from, of course, we know we have the tax appeal tribunal. But right now, if anybody is harassing you for tax, you have the tax ombudsman to run to. You can make a call. They are now set up all over the country, and the tax ombudsman, will come to your aid to settle any disagreement between you and the tax authority. We didn't have that before in our tax laws. Yes, the moderator also said the issue of revenue, revenue drive, shouldn't be the main aim of any tax reforms. And I agree, that is also not the main aim of this tax reform, to ramp up revenues. But of course, because the tax reforms will involve broadening the tax base, you heard him say that now digital services are going to be involved. Now leakages are going to be plugged. Now compliance level is expected to increase. All this, naturally will lead to increase in revenues. And that's why the government is thinking that the current low tax to GDP ratio of about 10%, by the time the laws are implemented, very well, we are likely to get to 15%, to GDP, or even to 30%. 18%, to GDP. So that will come, by the way. But that is not the main thing. The main focus of the tax reforms. The main focus of the tax reforms is to ensure that the business climate, is a lot more improved. And talking about leakages, the moderator, has already mentioned some of them. Maybe in the course of this, much later, I will elaborate, on them, a little bit. Talking about the fact that today we have multinationals who don't pay the taxes they're supposed to pay. Okay. Now, with the new tax law that provides for 15% top of the tax rate, once your turnover is up to 750 million euro, or for in the case of Nigerian companies, 50 billion naira, you are required to pay a minimum of 50%. And that's in line with the OECD. OECD is of the Organization of Economic Development, OECD, cooperation and development, countries, the agreements that they reached. So the minimum tax of 15%, and the fact that we now have the Pioneer Companies Relief, what used to be the Pioneer Companies Relief,
yes,
under which a lot of companies were, if you like, avoiding taxes. Okay, that has now been replaced, okay, with economic incentive, economic development incentives. So I'm going to speak more to some of these issues as we go forward. But overall, I want to submit that we really have a game changer, and of course, it is the implementation, how transparent it is implemented will go a long way, to determine, how successful the tax reforms, are going to be. Thank you very much for this opportunity. Yeah. Thank you, moderator.
Professor Adedipe, please. Okay, can I invite the second panelist member to give us your own introduction, Mrs. Joan Wuya, MCIPM, to the topic. Thank you.
Okay. Thank you so very much, Professor Waleke. Sorry about that glitch at this end. And I think you've laid out very well for us. I mean, proving clearly that having you on this panel is a right decision that the Institute has made. Let me now move to Mrs. Wuya, and let's take your view on this. What is your general perspective on this, especially from your own perspective as a practitioner? Mrs. Wuya, please unmute your mic. You are muted. You are muted.
I have. Can you hear me now?
Yes, we can hear you now.
Okay. Good morning, everyone. Thank you for the Institute for providing me this opportunity to join in this very important conversation. I want to stand on existing protocols to just talk about my general view and perspective on this tax reform. You know, as someone speaking from the NGO lens, you know, while we've heard a lot of good benefits about why this tax reform is very important, you know, employees don't experience tax reform as a policy. It's perceived as a reduced take-home pay, whether we want to agree or not. So my view is that the 2025 tax reform signal government's strong intention to improve fiscal responsibility, widen the tax base, and strengthen compliance mechanisms. At a macro level, that is very understandable because Nigeria needs to increase domestic revenue to fund infrastructure, security. We all know the issue around security and social services. But however, we need to also know that the effectiveness of tax reform is just not about revenue generation, it's about creating a balance. In my perspective, from the development and humanitarian sector, which I have been in for the past almost 20 years, we operate in fragile inflation pressure environments, often stepping into gaps. You know, we complement government efforts in gaps in service provision in areas of health, education, protection, and livelihoods. So any tax reform must be assessed not only for its fiscal logic, but also the ripple effect it has on, you know, employment, because we are also employees of labor, service delivery costs, the services we provide to our clients in the field, those gap areas I mentioned earlier, donor-funded operations, vulnerable communities, So for NGOs, where funds are restricted and donor budgets are fixed in foreign currencies, agreed years in advance, like for example, most of the implementations NGOs are doing in this year and maybe towards last year were agreements and resources that were agreed upon on fixed caps. So tax increases cannot simply be absorbed or passed on when it happens like that. So though reforms are fiscal consolidation, which is a good initiative on government part, for my own, where I'm sitting, I think implementation sensitivity will determine whether they strengthen or strain the broader ecosystem. Our economic realities that tax reform doesn't just hit balance sheets, it reshapes equity, motivation, retention of staff, and workforce stability. So while it's a very good idea in principle, and it's something that maybe, as Prof mentioned earlier, it's a good time that it's an idea, its time has come. Government needs to also understand that while this tax reform is a necessary civic contribution, citizens and employees, though they will want to appreciate the long-term benefits, we also need to also understand that sometimes timing and the economic realities also has an impact on some of these things. Employees will not be talking policies. People are looking at their take-home pays because some of these tax implementation we're doing in January, which has come into effect, did not mean an increase in staff salaries as across the board because for obvious reasons. So from my own perspective, timing, creation of balance, and also other sensitivities should be considered when such decisions on a national scale are taken, as we are all part of the economy. Thank you. I'm back to you, sir.
All right. Okay, thank you so very much. I think the key thing we're taking away from your opening line is timing and the balance. Of course, understanding the fact that this is necessary, no doubt, as you said, and of course, every reason why government needed to introduce the tax reforms. But we come back to that in terms of probably using some bit of data, to interpret this and put it in proper perspective. Let me go now to Mrs. Omomi Adewusi. Your opening line.
Okay, thank you very much, moderator. So I'll stand on existing protocols and I will not take, I don't want to repeat everything that Prof has said, but the reality for me is that the new tax act, yes, is a really, really big welcome, right? But the reality is, though it's progressive, it has two different, it's giving relief to the minimum wage earners, but for the high income earners, there's that power where the only relief that they sort of get is the cap at that 500. That 500,000 naira rent, there's still no clarity. It's not transparent to know how to do the calculation. It's all, it seems more like, it's just there, but how do you then implement it? In a household where there's husband and wife, husband has paid rent, can wife claim, or is it only husband that can claim that relief? Those are arguments that you find in a home today. The other thing for me was that, yes, it's a good thing for the small business because you then see small businesses not having to worry about the tax man. So startups can begin to benefit from this. Startups can see this as a very good opportunity for them because it's like a small carrot that they've been given, right? But when this then blow, what then happens? Then the last part for me is the administrative sanity. Yes, thank you for consolidating everything. But that consolidation, would it be managed in such a way that there's a lot of transparency, a lot of clarity, and there will not be any ambiguous, sub-tax that would then be slotted in? But summary for me is that, yes, the reform is welcome. and that it's something that will trade short-term complexity for the long-term stability. And we believe that if all things are put in place and it's done right, I think that we will be able to have a more competitive, a more transparent, and a more investment-friendly economy if we put things well now, not as we go along. I don't want us to use the Nigerian factor where we go along, we see a mistake, and then we're trying to correct it, and then it sets us back 20 years. So I think it's important to put in all the things together so that we can do things properly. Thank you.
All right, thank you so very much. And your contribution is very big in the area of implementation. And so it then is about, yes, we have these statutes in place. Already the reforms are coded, as we put it, but you are looking more at implementation. So how do we get that right so that we avoid administrative insanity, quote and unquote, that often attends implementation of policies in Nigeria. Thank you so very much for that opening line. Let's get your opening line, Mrs. Emma Moki.
Okay, thank you very much for the opportunity to be here, and I will stand on the existing protocol. So just like Prof. Uche has said that this is a very ambitious attempt by the government to try and reset the Nigeria tax architecture. And I agree with that. But beyond the technical amendment, I also see the clear intent to try and simplify, harmonize, and broaden the tax base, like everyone has said. But they do this while still recognizing the historical leakages, inconsistencies that have plagued the system in the past. But we all know that tax reforms, economic reforms are not evaluated by legislative intent, but by the economic realities, particularly for the formal sector. Again, this tax reform, from my own end, I see it as providing an effort to provide clarity of obligations. And with this clarity of obligations comes with increased costs, visibility in costs, because with the reforms, taxes will be more enforceable and it will be less avoidable. And with this increased cost comes what our team is speaking about today, increased cost of doing business, and even in the aspect of payroll cost budgeting. So from a compensation and benefit standpoint, I would say this reform makes tax to shift to more from the era of back-end statutory line item just for compliance, but to strategic frontline decision-making. So every salary reviews, every salary structure design will now begin to factor in effective tax planning that will protect the employee's net income in the long run. So directionally, this tax reform is in the right place as long as government is able to balance it with economic productivity. And then organizations are able to quickly recalibrate their cost strategies in response to this tax reform. Then we are sure to be in the right direction. But like they say, and we all know that no true success is a solo endeavor. It's usually a collaborative one. And I will employ everyone to see it as such. So in a nutshell, that's my perspective.
Thank you so much. I mean, and this, in fact, has brought a very important dimension to this conversation, and that is the shifting of tax as a back office consideration, now as a strategic issue that, of course, becomes very key in terms of tax planning and its execution. And that is a very interesting one you mentioned there, because the statutes also provide, especially for large enterprises, that if you have a tax plan, you need to also submit that to the tax authorities, which means you design your tax plan for the beginning of a financial year. That, of course, once you finalize, is submitted to the tax authority so that when you file your returns at the end of that financial period, there can now be a comparison of your tax plan with what you have submitted, so that we see whether indeed you are planning to follow what the provisions say, and indeed you are also considering all the issues, like our panelists just said now, see tax as a strategic issue. Thank you so very much for that. Let's now go a little bit more specific and look at issues. So I will start with you, Professor Waleke, and I will take on this question. Please let me also mention, please, Our distinguished audience, if you have any question we'd like the panelists to attend to, use the Q&A box. There's a question and answer box on the dashboard. Drop your question there. I will do a review of that along with my colleague at the Secretariat and see how we can marry that with what we have already laid out to put before the panelists. So please, the Q&A box is available for that purpose. So, Professor Waleke, and I will come with this question. How best can corporate taxpayers respond to this potential impact on their cost that almost every panelist here has mentioned? I think you are in a very good position to give us this particular angle to it. How best can they respond?
Thank you so much, Prof. Maybe before I comment on that, there was something that one of my colleagues here mentioned. I think she was having reservations regarding the rent relief. The rent relief is 500,000 naira, or 20% of your actual rent. The actual rent you've paid, 20% of it, or 500,000 naira, whichever is lower. So that's the rent relief that you have. And of course, based on evidence, whoever that paid the rent is the person that will enjoy that rent relief. Now, how will corporates take advantage? Now, of course, it depends on the size of the company. I talked about small companies now being completely exempted. Turnover of 100 million being completely exempted from tax. That's the formal sector. Now we're in the formal sector. Then, of course, if your turnover is more than that, that means you're liable to pay the company's income tax of 30%. Now, the good news, which not many people are talking about, is that in the law, the Nigerian Tax Act, there is a provision for a possible reduction in the company's income tax from 30% to 25%. Okay, so it's something that will be activated, under certain conditions. So you can imagine if company's income tax in Nigeria eventually drops to 25%, the multiplier effect, that can have on the economy, that can have on jobs, job creation, that can also have on investment decisions, by firms. So that is there for companies. But going by what we have now, the Nigerian Tax Act, I would say that I would advise companies to begin to think of how to, ensure compliance, compliance, because that is the way to even reduce your cost. Because when you comply, you are not likely to, face penalties. And part of how you can do that is to begin to invest in your accounting software. See how you can improve your accounting software, your IT systems. The tax authorities today emphasizing fiscalization, the idea of e-invoicing, for example. These are things that will ensure that the processes are, seamless. You can find your returns, more efficiently. Then there is also the other issue. As I mentioned earlier, the law has already taken effect. So whatever we say here will not change what is in the law already. So what we can only do is to see how we can take advantage of what is there already. Of course, as we discuss here, whatever recommendations that will come out of this roundtable, I'm sure you will also be having them by way of communique and submitting to relevant authorities. Part of what I will also be taking away from here is, will be those recommendations. So whatever you recommend, in the next 1 week, we are going to be having our meeting. I'm also going to draw the attention of the chairman of the committee, Professor Taiwo Yedele, and the other members to the outcome of this session, to say these are the things the people are still saying, to see how we can, make things better. But the point must be noted that the law, is already there. Now, the other way corporates can also take advantage of this is to check the laws. That's also why I'm happy that CIPM is organizing this, to sensitize members of the public. Okay, you need to go through the laws, and look out for incentives. What are the incentives for companies in the laws? That is what you should be looking out for. Today, we have the economic development incentive that gives companies, 5% tax credit on any qualifying capital expenditure that they make. So if you are planning to expand as a company, you're asking yourself, what are those areas that I can get, get some tax reliefs? I was discussing with somebody that works with the Corporate Affairs Commission, recently, and he told me that because of the new tax laws and the number of applications that get in now for, for company registration are now more in the area of agriculture. People are now applying to set up agri firms because they see incentives in, agri firms, and they want to take advantage of that. So that is one thing I would encourage companies to do, to see how they can take advantage of the incentives that are already in those tax laws. We have so many of them, including incentives even for research and development. The other thing too, I want companies to open their eyes to is the issue, what we now have in the reforms that are now embedded in the VAT. Okay, the VAT rate did not change. The VAT rate was retained at 7.5%, but the VAT process was reformed in the way that today, unlike before, you can reclaim your input VAT, and that is the way a VAT should operate. VAT is value-added tax, and the tax is on value-added. So if you have a VATable item and you have paid input VAT in producing anything, you are expected to, pass it on by way of, output VAT. Now, in the case where you're not expected to pass it on, as applied to, companies in the agri sector, in health sector, in education sector, those ones that are now zero rated. Okay, well, before now they were exempt. Exempt means if you were in, let me give a practical example. Food, and the case of food, I want to use the example of bread. Your bread producer, you manufacture bread. Before now, bread is exempt. Exempt means no VAT is charged on bread. So if you produce your bread and you're selling your bread, no VAT will be charged. But as a manufacturer, you must have incurred VAT when you are purchasing the equipment you are using in producing the bread, when you are purchasing the motor vehicles for distribution, when you are purchasing even the raw materials you use to produce the bread, whether it is flour, whether it is sugar, and so on, you pay the input VAT. So under the old system, you were not allowed, you were at a loss because you couldn't recover those input VAT because your product was completely exempt. But now there's a new status. The new status is zero rated. Zero rated means, yes, it is under the VAT framework, but at 0% charge. It means your bread will also not experience VAT because you're charging it at 0%, what you're selling. But you are in a position to recover all those input VAT you paid in the production of that bread. So you can see these are things that corporate companies should be watching out for. And the law also says that that VAT refund must be made within 30 days. So companies in these sectors can take advantage of that and to ensure that they are recovering their input VAT. And other things being equal, it is expected that if these reforms are well implemented, it could even lead to a reduction in food prices, for example, a reduction in the cost of education and health that are expected to enjoy zero rating, as opposed to the old exemption status. So in summary, Professor the moderator, these are the areas the corporates can watch out for, to take advantage of the new tax reforms. I've talked about compliance, ensuring that accounting systems are, upgraded. I've also talked about, incentives, looking out for incentives and also trying to also take advantage of the input VAT provision that we now have, which wasn't there, which wasn't implemented, before now. Thank you very much.
Thank you so very much, Professor Waleke. Actually, you've touched upon all the issues that I had envisaged you will speak to in terms of benefits that companies and their corporate entities generally should look at in terms of managing their costs. Perhaps the most interesting for me is compliance. It is more expensive not to comply and get sanctioned than to comply and therefore give more time and attention to running your business. Thank you very much for that. Let me now come back to Mrs. Weir, and I will put it this way, that from your own angle now, how do you reckon that the new tax laws will impact the cost of doing business? How do you reckon it will impact the cost of doing business? Because that's the central theme that we are interrogating today. From your own perspective, how will it impact the cost of doing business?
Thank you, Prof.
Okay, yeah.
Yeah. Technology challenge. Okay, yes, from my own perspective, like I will say, despite all our buzzwords and, all the optimism we have with these tax reforms, employees will still experience this as a reduced take-home pay. So in the broader ecosystem, when we talk about how it impacts state and non-state actors, like non-state actors like NGOs, private sectors, and other non-government organizations, this tax reform will impact them in so many forms. First, we have the direct cost escalation, the cost of doing business for private sector, for even NGOs like us. There's adjustments in VAT scope, withholding tax, compliance levies, administrative obligations, increased operational expenditure, which happens immediately. For private sectors, this may be transferred, like businesses, they may transfer it into pricing mechanisms and, and the consumer will feel the impact. But for NGOs and other development partners and public service institutions operating on fixed budgets or appropriations, there's limited flexibility. So this increases burdens on program coverage, slow implementation, or constrained workforce investment. So monies that we need to use in training our staff, doing other things, we need to make adjustments. So this affects it. And then workforce compensation implications, because these tax changes comes with changes in payee, pension, and benefits in kind. So directly, it reduces employees' disposable income. In a high inflation environment like ours, this creates a perception of, income erosion, even when gross salaries remain unchanged. Because like I mentioned earlier, not everybody will have the opportunity to increase staff salaries based on the appropriated budgets that they are working with. So state institutions, private organizations, and civil society may face heightened pressure to review compensation structures, which potentially increases wage bills at a time when margins are already tightened. So these are some of the costs that we might face in doing business. Then we have the issue of compliance and institutional capacity strain. Enhanced reporting and regulatory requirements require stronger financial systems. There's a lot of, just like Professor Uche mentioned, this tax has taken effect in January. We are still struggling with interpretation of some of the obligations that we have as employers. And so it comes with a lot of financial strain. For instance, my organization had to even get a tax consultant to explain some of our obligations as the case might be. So there's a lot of implication in that aspect. Larger corporations and well-funded institutions may adapt more easily, but smaller enterprises like local NGOs and subnational actors who face a lot of, hardship in those areas. So monies that are meant for procurement, for service delivery to our clients and other such resources might need to be adjusted in a manner which might affect, at the end of the day, the objectives of which those monies were meant for. So it's really, like I said, nobody is against the tax, provision or the reforms, but timing, supports, and communication and involvement of all concerned members of the economy, as the case might be, would have also helped in reducing this cost of doing business. Lastly, when private sector suppliers absorb higher taxes, those costs are passed along the value chain, affecting government procurement, like I mentioned earlier, humanitarian services, logistics, utility, and service delivery across all sectors. So for me, since we have Professor Uche on this call as an advocacy from a HR perspective, we are saying that for tax reform to achieve, its fiscal objectives without undermining productivity and workforce stability, it's critical that employee disposable income considerations are factored into this policy modeling. Implementation timelines allows institutional adjustments. Let's, have some timelines. It could be structured, it could be tiered. Support mechanisms are considered into for smaller non-state actors, private non-state actors like CBOs, informal sectors and thereabouts, dialogue between policymakers, employers, and institutions like CIPM should be involved in, in the discussions around, because when we talk about tax, we're talking about workforce. So I don't know if a member of the CIPMs are on the board of those discussions, but if it's not, as we take this as an advocacy, we should be carried along in such discussions going forward. So in summary, tax reform is strengthening national revenue in the long term, but its design and implementation must carefully balance fiscal sustainability with workforce protection, institutional reliance, and economic competitiveness, because from the employee perspective, changes in pay, pension, taxation, or taxable benefits affect income. Even without salary adjustments, employees feel an immediate squeeze, and these taxes have to be paid. So thank you, and back to you, Professor Biodun.
All right, so thank you so very much. I think one critical thing that you raised in your, contribution now is to do with communication. And that means I look at it for the perspective of enlightenment and, of course, creating a lot more awareness so that people understand what the studies are and also correctly interpret them. I think that is very, very important. It's also important for us to note here that this particular reform, even though I was not a part of the committee, all right, but I know quite well that they relied a lot on data, and that is using the data on, employees and also on businesses to set those thresholds that Professor Waliki made reference to earlier on, talking about how many registered businesses in Nigeria are micro, small, and medium-scale enterprises. How many of them are large? Okay, and again, looking at employees, how many people earn within minimum wage, which is very low anyway. But then when you also scale that up on the people who earn up to, let's say, 12 million or 18 million in a year.
Yes.
So by the time you bring all of that into, the equation, you find that the number of paid employees within that bracket also becomes quite significant. So the essence, therefore, of a progressive tax system is to ensure that the more earning power you have, the more you also pay. And I think that has been built into this reform. But again, like I said, we are just like you said, I'm an advocate as well. We advocate for improvement in policy. And so all we can say here to the extent of my own knowledge is that they used a lot of data in arriving at the thresholds that were set variously. Let me bring Mrs. Adewusi into this. And although it's something you mentioned in passing, but this can also be interesting. Is there a possibility, that paid employees begin to agitate for pay increases? And put this also in perspective, please, the fact that up to a certain threshold, what these reforms indicate is that you are paying less tax than we paid before, even if it's just a marginal decrease. But to some extent, some paid employees are paying less than they used to pay. But for those who are, if you like, use the language of heavy punchers, all right, who now have to pay more. So is there a possibility that it can begin to, agitate for pay increases as a result of this? So, Mr. Adewusi, over to you.
Yes, in a very simple answer, yes, there's agitation already. Because, even though it's true, let's be very factual. There's already agitation that increase my salary to match what I'm paying. So if you're earning, and when Prof was saying that if you earn 1.5, you don't pay, you're exempt. It's not very true, sir. Because when we are running payroll, we see that it's hitting, even though the difference is even if the difference is small, like 20,000, 15,000, it's still something that employees don't want to understand. They want to see what is the company doing to absorb that tax. So there's a bit of agitation, but the reality is that the transition, yes, there's a lot of transition, and that it says that it's the high earners that will sort of suffer the huge the effect of the tax. Because everybody has said to us is a 25% tax increase, but the reality is it's not a flat 25%, it's graduated based on the tax table. So by the time you apply it, you will see that for the high earners, some people's tax, when we ran it, you could see a difference of about 400,000 additional tax that they have to pay. So if I'm going to increase salary, what that means for me as a business is I'm going to absorb that 400,000 naira, right? And then also now put maybe an extra, maybe 100,000 on it to just sort of give them, manage this. Do you understand? But there is agitation. Now for the lower end, for the minimum wage earners, there are not a lot in a lot of organizations. Let us be real with ourselves. Based on that threshold, we don't have that much room. The people that are heavy is the middle income earners. Those are the ones that are feeling it because their income is not a lot. So what you see is that even the consolidated relief that you think that they have is not a lot, because when you cap the rent at 500,000, and when Prof was addressing it earlier, capping the rent at 500,000 means that if a middle income earner lives in Lagos, Abuja, or Port Harcourt, where rent is very expensive, where you pay minimum of, I think, 2.5, 3.5 for 4 million naira. What that means is that the relief you calculate at the end of the day is about 10,000 naira. It's not significant in the eye of an employee. So they will want you as a business to cover that cost for them. So what we'll see is that the impact is on the skilled labor, the guys that are doing manual business. They are the ones that will benefit. But for the paid employees, we will see a lot of agitation from them. They will be pushed back. They would ask for increased salaries. And now that in the era where there was a lot of jackpot, we were struggling to keep them. Now that there's a bit of jackpot, what we are seeing is that even with the jackpot people, they are calculating tax to know that they are not at the end of the day suffering. So what I would say is that yes, it favors the low income earners, but in terms of the high income, you will pay more. But at the end of the day, how do we then manage it so that there's a balancing effect for all earners? That's where I see it. Thank you.
All right. Thank you so very much. Now, your response to that triggered an idea in my mind, and of this perspective that shouldn't also we begin to educate our people about responsibility, civic responsibility as taxpayers, all right? And understand the fact that, yes, I work for the sake of conversation, I work for Access Mansa, all right?
Yes.
That's my employers. But at the same time, I live within a particular, country. Let's call it geography now, using the strategy language, for planning for businesses. Now, within that context, just like a business pay taxes, because that environment creates opportunities for it to generate income, shouldn't the same thinking apply to employees? That you work in an environment and there are some things you benefit from that you do not provide directly for yourself, okay? So it means then that there should be a lot more citizen engagement and then communication and awareness so that people begin to also understand what they call social compact. That is, I pay my taxes, and then there are some things government is also doing that benefits the citizens. Now, in fact, what you said now about Japa and Japada reminds me of a phenomenon. I don't know which of our panelists I had penned out for. And that's the phenomenon where a paid employee will resist promotion on account of paying more taxes. We see that happen in most of the advanced, countries.
Yes.
If I know somebody who is a nephew to my wife, who was promoted in a bank he's working for in the UK, and did not accept the promotion.
Yes, because the tax would increase automatically.
And his net take home would be lower than what it earns now. So that's a jurisdiction where you see tax truly is progressive, and then employees also become rational in their decisions and choices. All right, but we talk to that later. And we take one more question here from our Mrs. Emamoke before we bring something on the screen to share with our audience. And that is the issue of the new tax laws impose higher burdens on large enterprises. And my question is this peculiar to Nigeria, and can it be counterproductive? We say it is progressive, so large enterprises will now be paying more. Now, can we argue that this is peculiar to Nigeria, or that it can be counterproductive? So, Ms. Emamoke, you have the floor.
Okay, thank you. So I will say that it is unique to Nigeria because globally, large organizations are known to be strong tax anchors because they are formal, they are more visible, they are easier to regulate. What just makes Nigeria's case more complex is the stacking increase in cost or administrative tax. Take, for instance, the introduction of this rent relief to a large organization that has about 3,000, 5,000 employees have to get their their rent information. How cumbersome would that be? Remember again that in Nigeria, large organizations have been plagued with infrastructural deficits, energy costs, foreign exchange exposure, and then increasing costs. So if you layer all of these costs together and you don't wage it with positive enablers for productivity, what it can lead to is that these large enterprises would not be competitive, or it can reduce expansion. And then from the people cost angle, for large organizations, what you find out is that they will become more defensive. There'll be things like recruitment freeze. You'll find out that salary reviews or increments will be slimmer. Headcount models will shift to tighten. All of those things will begin to happen. So if there's excessive tax burden on large organizations, it can become counterproductive, and it will directly impact employees, the existing employees, and even the job market as a whole. Like job creation will be impacted. So I would just say that sustainable taxation must be balanced with policies that promote economic growth and not just revenue extraction. So that's how I see it with large enterprises.
All right. Okay, thank you so very much. Now, there are a few things about the tax reforms that the CIPM Secretariat collated for us. I will share them on the screen for the audience to see. We put it simply as, did you know? And that is what I will share, right away. And then after that, I will come back to our panelists. I will start to also filter questions from the Q&A box. So, and it says, did you know there are about 14 things here that the Secretariat put together? And I think we need to give that attention. There are highlights of the new tax law. And the first says, Federal Inland Revenue Service is now the Nigeria Revenue Service. And then you are automatically exempted from personal income tax or payee if you earn the national minimum wage or less. Number 3, annual taxable income of 800,000 attracts zero tax, and that is approximately 100,000 naira monthly gross salary before tax reliefs and allowance. Number 4, if you earn annual taxable income above 800,000 after tax reliefs, rates are graduated, reaching a top rate of 25% for high income earners on the portion of taxable income over 50 million naira annually. Number 5, you are entitled to deduct 20% of annual rent up to a maximum of 500,000. You can deduct also your pension contribution, also your contribution to National Housing Fund, your national health insurance, your mortgage interest, and life insurance premium from annual income to arrive at taxable income. All of these are different reliefs provided in the new tax law. Number 6, by taking advantage of tax reliefs and rent allowance, your real tax rate on income is reduced for all categories of payers, which means even if you earn much higher than minimum wage or above the threshold of 800,000 naira per annum, you can still get release across all these items listed in number 5. The number 7 now applies to businesses, small businesses, SMEs, with an annual turnover of 100 million naira or less, and fixed assets under 250 million are now exempt from corporate income tax, from VAT, and withholding tax. That means zero tax for them. Also, number 8, if your company is small, that is an SME, you are also exempt from the new harmonized 4% development levy. Let me explain this development levy. As we mentioned earlier, Professor Waleke said that in the Constitution of Nigeria, there are about 60 taxes, levies, and dues mentioned in there to be collected across the 3 tiers of government. All of these are being harmonized and consolidated. So a good number of those levies have been harmonized to only 4%. So, but even these SMEs are exempted from them. Number 9, informal and unregistered businesses, annual turnover of 100 million or less. That means even if the business is not registered, it is also still exempt from VAT and of course deduction of withholding tax. Number 10, new companies in the agricultural sector enjoy a 5-year tax holiday in order to boost food security. Professor Waleke again made reference to this in passing earlier on. VAT remains unchanged at 7.5%. The businesses can now recover input VAT on all purchases, unlike the previous, regime where there was no VAT recovery. So let's take, for example, any of the entities on this platform that is profit seeking. You bought in some materials, you even paid for some services that were on which there were VAT levied. Okay. Now, what it says is that because you are a vatable agent yourself. It means there is input VAT, and of course, there is also output VAT. It now says the input VAT, you can actually claim that back, but within the window of 30 days. That's what it provided. But this recovery of input VAT was not in the old tax regime. Number 12 here, basic food, medical products, educational materials, and electricity services are now included in zero VAT list. I will come back to Professor Uche Waleke on that, because the law also is clear about the difference between exemption from tax and zero tax. So if VAT is zero and there's exemption from VAT, what is the difference? We need to also understand that. As Professor Waleke also said, there's a new office of the tax ombudsman, which has been created to help taxpayers resolve complaints and disputes with tax authorities more quickly. For me, this is an important game changer, because every time I spoke at international tax conferences in the last maybe a decade or so, I've always made reference to this as a missing gap in the tax statutes in Nigeria. I normally refer to it as the absence of tax redress. So for me, it's an exciting to see in the new law. Lastly here, large companies with turnover of 50 billion naira and multinationals are now subject to a minimum effective tax rate of 15%. Again, this is driven by data, because most of them have always engaged in very, very active tax planning that even goes beyond that and at times borders on tax evasion. So what is now done is to adopt the global best practice in this regard, as Professor Waleke said earlier on, looking at what happens in OECD countries as best practice. Minimum is 10%. So if you do all your fantastic tax planning, whichever way you want to play around the various statutes, and you come with a tax rate that is lower than 15%, that is effective tax rate, then this law says minimum you will pay is 15%. And it is not difficult for any of us to check that out. You can pick the figures of any public entity that publishes its financials. Take what they pay as tax, compare with their revenue or income, as the case may be. Work out the tax rate. If that tax rate is less than 15%, that means in the old regime, they could get away with it. But now says, under this new tax law, if anything the company does results in effective tax rate less than 15%, this new law now mandates them that they must pay that minimum of 15%. So this, I believe the Secretariat will make available to everybody. So I will stop sharing now. And I thank you very much. Now, let's take a look at the Q&A box. I will select some questions there and then put before our panelists. But this time around, since there's no name to any of the questions I've seen so far, I will just throw the question out and any of our panelists can please respond to that. I think...
Prof. Sir.
Yes, please. Yes.
Just to sort of give a little bit of break as people drop their questions and answers, can I just quickly bring in the chairman of the Conference Planning Committee to do a quick announcement, please? And then,
yes, please.
For participants, please drop your questions and answers in the chat. Sorry, not the chat box, in the questions and answers box, please. Whilst we take this quick break to take this very important announcement from the Institute by the chairman of the Conference Planning Committee for 2026. That's in regards to International Conference and Exhibition 2026. So I invite Ms. Ebun Owolabi, FCIPM, Chartered FCIPD, to please take the floor for 5 minutes. Thank you, Ebun.
Thank you very much. The President and the Chairman of the Governing Council, standing on every existing protocol, I would like to first start by bringing forth my favorite quote from B.B. King, who says that the beautiful thing about learning is that no one can take it away from you. We've been here for more than an hour, and it's been learning and learning and learning. And the learning continues at ICE 2026, which we are saying it's the CIPM 58th International Conference and Exhibition. And the theme this year is repositioning for value and impact. It's taking place on the 21st to 24th of September 2026 at the Bola Ahmed Tinubu International Conference Center, Abuja. It's going to be another opportunity to indeed reposition from a strategic standpoint, either as an individual, a professional, or even as an organization. This is the 58th edition, so maybe we might want to ask to say what's changing and what is different. This time around, we're going to increase the value proposition for your attendance in ICE 2026. It's going to be an opportunity to learn and engage with global and local thought leaders. It's an opportunity again for exchange of ideas and for everyone to come this year to Abuja with a design thinking approach to solving human resource problems, both within their organization and globally in the wider ecosystem, as the case may be. It's designed for more participation, learning, and even moving the paradigm or the operating envelope from leadership to lasting impact. We're going to be having a lot of executive master classes. Please come ready to learn, unlearn, and relearn. We'll be having practical learning clinics and pods as well. It would be another opportunity for us to have insightful conversations, just like the one we've been having in the past hour. There will be high-level business and policy dialogues. It's about time that as professionals, we are also moving to shape the way advocacy and policy is being done in our nation, in Africa, and in the global ecosystem as a whole. That's going to come really to the fore in ICE 2026. We will not only be listening, but we'll be participating, we'll be influencing, and we'll be having conversations where it matters. There would be the opportunity for strategic networking. I know for a number of us, we're at ICE 2025, and we did see a bit of that. And I'm happy to inform you that indeed we'll be having more and twice the numbers that we had in ICE 2025. So come ready to network. We always say that your network is as good as your net worth. You want to increase your net worth? Please attend ICE 2026. And of course, there will be actionable strategies that you can deploy immediately. Lastly, it's going to be fun. And when I say fun, I mean fun. Come ready. We would be having more silent discourse, more parties, more networking, and a lot of goodies to go home with. Once again, I would say that indeed the beautiful thing about learning is that no one can take it away from you. We look forward to seeing you at ICE 2026. Come ready, come prepared, and let's clock it. Thank you.
Thank you very much, Chairman, Conference Planning Committee for 2026. Our moderator, sir, it's over to you. Thank you, Chairman.
All right. Okay. Thank you so very much. And okay, so we can see the, the program right there, the ICE program for this year on the screen. So certainly you can still pick this up from the other portals of the Institute. So back to our Q&A. I think I will put a question to Professor Waleke first. And my reason is because he has another engagement and we had promised him that we allow him to leave to join that before we wrap up our session here. So let me come to you, Professor Waleke. Now, in what way can the tax laws change taxpayer behavior? And how best can the government steer this towards acceptable conduct?
Thank you, Prof. For that very good question. But before then, if you don't mind, just a quick reaction to some of the comments by my colleagues.
Yes.
One of my colleagues, has been very much particular about the personal income tax. She's been talking about increase in disposable income. Reduction in disposable income as a result of the higher level of taxes. But I think, on the contrary, what obtains is increase in disposable income for a majority of workers. And that is why I think if there is any group, any sector that should support these reforms, it is the workers, because the majority of workers are going to experience an increase in their disposable income. It's only the high earning workers that will, of course, be expected to pay more, because one of the things, of course, taxes are also used in many jurisdictions. They are used as tools to redistribute income. And that's also part of what these tax reforms are geared towards, to ensure that the poor, really, the vulnerable people are protected and they enjoyed all the reliefs. And if government is looking for money, the government should get that money more from those who, more from the wealthy. So I don't think, in a nutshell, I don't think disposable income is actually reducing. I'm sure everybody here should be familiar, maybe as part of what you curated. By the way, I want to commend you for those high points you curated. Is that they are spot on. Maybe as part of that, you can also drop the website of the Presidential Fiscal and Tax Reforms Committee on it, so that people can on their own calculate their tax, what their tax taxes should be. There's a tax calculator in that website. If you go to fiscalreforms.ng, you check the personal income tax calculator, and then you calculate your own tax. And the way to do that is not to drop your. Remember, as I said earlier on, when I said somebody earning as much as 1.5 is not likely to pay tax, this is because I've assumed that by the time the reliefs are removed, pension is removed, national housing is removed, the mortgage interest is removed, the life insurance is removed, so rent is removed. By the time you remove all of that, the taxable income is likely to come down to 800,000 naira or less, and the person will be completely exempt, from tax. So, but in order to avoid any argument, use the tax calculator that we have in that on that website. So just calculate your tax, and you will see that if you are not a very high income earner, your effective tax rate is the rate, the actual tax, divided by the income. That gives you your effective tax rate. So effective tax rate is likely to be lower by the time you finish doing that. So the other thing I need to say has to do with even for large enterprises. Somebody also said large enterprises are also going to pay more. It's important for us to note that no new tax was introduced in the tax laws. And as I mentioned to you earlier, even for large companies with turnover of more than 100 million naira above, in that law, it's not part of what you curated, but in that law, there is a provision that the company's income tax rate will eventually drop to 25%. Why I said it's conditional is because the law says on the recommendation of the National Economic Council, of course, the president has to approve, but it's already there that there is a plan to reduce the company's income tax, in the near future. I also want to advise, since CIPM, I can say this is one professional body that must be reckoned with. So, as part of your advocacy, what you should be concerned more with now is what the government, needs to do with the likely increase in revenues that will happen. I've told you revenues will increase, by the fact that leakages are going to be blocked, by the fact that a number of activities are not going to be taxed, like digital services. Of course, those people should pay tax no matter how small. So when revenues come in, how should they be used? How should they be applied? That should be one of the concerns of CIPM. Okay, CIPM should be advocating that these revenues are applied, used in more in social services, areas that will benefit the workers. In public transportation, for example, the worker will benefit. Okay, in education, in health, these are areas that the worker can directly benefit. So that should be our focus. How do we spend what we are going to get? The quality of spend, is very important. Look at the case of value-added tax, for example. The sharing formula has now been adjusted. Currently, or before now, VAT used to be shared 15% to the federal government, 50% to states, 35% to local governments. But now the states are now going to get 55%. Okay, local governments 35%. So federal governments will now, own share has been reduced to 10%. So the question is, the advocacy is the additional 5% that is going to subnationals, that's going to the states in particular, what are they going to do with it? How can they use that to benefit the workers? Remember, the personal income tax you're paying is going to the states where you are residents, okay, not the federal government. It's only those in Abuja or those, the police that pay to the federal government. The personal income tax is actually taxes meant for states. The same thing applies to stamp duties. All the money now that we're collecting from stamp duties, it used to be electronic money transfer levy. They are now going to states. So advocacy, should focus more on what do we need to do with the money that will come in order to benefit the workers, to benefit the employees. But to answer your question, directly, Prof, you see, in order to steer behavior, you need carrot and stick, if you like, carrot and stick approach. The stick approach, of course, has to do with, I told you, ensuring that people comply. Okay, so now there is no option of non-compliance, particularly when the Revenue Authority, Nigerian Revenue Service, for example, is using, deploying technology, fiscalization to ensure that the money that's meant to come in, actually comes in. So there are penalties. So that is the stick. And when you know that the penalties, it will also, induce you or force you, to comply. The other one is carrot. And that's also where you have, a number of incentives that will also encourage people to, follow a path. A good example is the issue of the capital gains tax. Capital gains tax was increased from 10% to 30%. With respect to the sale of shares, for example, the idea is to encourage people, encourage investors to, not to pull out from the capital market. So if you're selling any shares, for example, and of course, let me start by saying that there is no capital gains tax on sale of shares below 150 million naira. Again, that's the wrong impression that people have. People say if they sell their shares, there will be capital gains tax. There is no capital gains tax. It's only when it is up to, you sell something worth 150 million naira that you can talk about capital gains tax. And in that case, the law also says if you reinvest the proceeds of your sale in the same market, you're not taking it off. Again, you don't pay any tax. The whole idea is to ensure that portfolio investors, those who bring money from outside, they don't come here, sell shares, and then go away. So that will distort our market. So that's one way, again, of steering behavior. When you have that kind of law, that will ensure, that will incentivize people to remain in the market rather than just come in, and go out, because that can be quite destabilizing for an economy such as Nigeria. So a whole lot of incentives, as I said, are meant to steer behavior in a particular manner. I gave an example earlier about investments in agriculture. I also gave an example earlier about encouraging people to innovate. The law encourages innovation, and that's why if you innovate and you spend money, you can deduct those money. Deductions on researches are also on the, research expenses are also, allowed. So those incentives encourage people to invest, encourage them to innovate, and the stick, I talked about earlier, tends to discourage, non-compliance. So in a nutshell, these are the ways that, the laws, are used to steer behavior. But again, I want to say that the committee, the Presidential Fiscal and Tax Committee, spent nearly 2 years coming up with the recommendation since 2023. And remember, the laws also went through the normal process. Okay, there was public hearing. So some of the things that have been coming to the fore now are expected. This, CIPM, for example, during the public hearing to make, to send in a memorandum, and during the consultation process too, when the tax committee was consulting with professional bodies. Okay, these are also the period that the CIPM could have also engaged with the committee, so that these things are taken before, not now that the laws are in place. But it's not late. It's not late. I also want to believe that, as I said, once the outcome outcome is known, it can also be taken to the committee. In the event that, of course, there's no perfect law. I want to believe that going forward, there may be need for amendments, here and there, and that is now when the recommendations from the CIPM can be well, accommodated. Thank you very much, Prof.
All right, thank you so very much, Professor Waleke. Now we have quite a number of questions in the Q&A box. I have tried to answer some of them by typing the answers, and of course, I'm sure those who put the question there and are paying attention should have seen them. I think at this point, Professor Waleke, we let you go because of your meeting that comes up in another 12 minutes. So, but one more question for each of the panelists. I extracted them from the Q&A box, but like I said, I've attended to some of them. Take, for example, somebody asked about Nigerians in the diaspora. Of course, incidentally, I've done quite a bit of webinars for Nigerians in the diaspora on the tax reforms. The one thing that is very clear in the tax laws is that if a Nigerian living, let's say, US, UK, or anywhere around the world, you are not required or mandated by the law to register and pay tax here. Unlike the information people have been pushing around, there is no such requirement. But there are two things you need to pay attention to. Number one, if you are a Nigerian in the diaspora and you have investments in Nigeria from which you earn income, then the relevant tax payment will be made on that income earned on that investment here in Nigeria. Then secondly, the residency law now applies as well, and it's clearly stated in the tax law, the new tax law. It says if you're a Nigerian who is in the diaspora, but for different reasons, you come to Nigeria and you reside there for 183 days within the space of 1 year, that means you are also under that law eligible to pay tax here. That means you must obtain a tax ID. And that brings me to a question somebody asked here about tax identification. You don't need to apply for that. It's already automatically generated for every Nigerian who is registered with a NIN, and also any company that is registered with the Corporate Affairs Commission. How do I mean? As an individual, if you go on the portal of the tax authorities and type in your NIN, it will give you your tax ID. It already exists. You are not applying for it. You are only retrieving it. It already exists unless you don't have a NIN. But if you have a national identification number, you already have a tax ID. All you need to do is go to that portal and retrieve it. If you also have a registered business with Corporate Affairs Commission, all you need to do, go to the same portal, select company, and type in the registration number of your company. Once you do that, it will give you also your tax ID as a corporate entity. Those things already exist. You don't need to apply for them. There's a question here that says, is it compulsory to tax all the training fee, say 5% withholding tax and 7.5% VAT? Now, I don't know whether any of our panelists here wants to address that quickly before our time is up. We should be rounding up in another 4 minutes. 3 minutes now, but the clock just changed. In another 3 minutes. Does any of us want to speak to that? Okay, maybe because of our time, let me treat it this way. Now, clearly, training is a service delivered to clients. And of course, if you do that as a profit-seeking entity, naturally, withholding tax will apply and VAT will also apply. But again, the question is, what is the size of your revenue? So, and that is what we determine whether this would be applicable or not. Somebody put a question: how can we hold the government accountable for proper use of tax proceeds? That now is a side of the equation that is not in our own purview, other than to say that we can now begin to also advocate for proper use of the money, take our leaders accountable. So that there is no provision in the law that says I, as a citizen, can go to exercise an authority over how they use the money, other than to engage government representatives on an ongoing basis and begin to look more at a demand for value back. That, in fact, is an important issue in the three major concepts and theories on taxpayer behavior. Of course, somebody asked about whether there's a threshold for VAT. There's no threshold for VAT. There's only threshold for income. All right. And then another question that I found interesting, somebody says, which tax laws are we following? That question is already answered in the sense that the new tax laws, 4 of them, were signed in June 2025, effective 1st of January 2026. So if you are within the Nigerian territory, those are the laws regarding tax that we are all subject to, which means whether we have any complaints about it or not, we are subject to those laws. They are already laws. And like Professor Waleke said, they went through the normal process of codifying any regulation in Nigeria. So what we can now do, which is the beauty of what we are doing here today, is to identify where there are gaps and what we believe should be done. And again, the committee is open, so we can go on their, they have a website, they have portals where we can give feedback as well. But like Uche said earlier on, we believe that there are a group of people that will collate what the interactions we have had here today. So let me now, on that note, say a very big thank you to our panelists that are still here. A very big thank you to Professor Waleke, who has gone for another meeting, Mrs. Joan Wuya, Mrs. Omawumi Adewusi, and Mrs. Ogugwa Emamoke. Thank you also very much. I will now yield the floor. It's 1:55 exactly, the time we are supposed to end this conversation.
Prof, sir.
And yield the floor back to the...
Prof, sir.
Yes.
We can still take more questions up to...
Yes.
205. We can still take more questions. Up to 205, sir.
Okay. I was following strictly the agenda, that says we should wrap this up by 1:55. Okay. Well, let me check again the Q&A. There's a question that we have not addressed, because a good number of the questions are actually repeated. That's why some of them I answered directly by writing the answers, and then some I extracted and spoke to just now. Well, I think we've said enough for the rent relief. And of course, it will be a part of our feedback to the committee on that the threshold is set is too low. That's a clear feedback that will be given back to the committee. How does the new tax reform ensure that higher earnings are not unfairly overburdened while still protecting low-income workers? Because it is looking as if we are running a progressive tax system in Nigeria. Indeed, we are now running a progressive tax system in Nigeria, like in most other tax jurisdictions. You are absolutely correct on that. Maybe what we now want to advocate for is that the threshold for tax exemption should be raised from 800,000 to a higher figure. Maybe that is what we address the question you raised there. Let me check again. All right, I think Mrs. We have spoken a lot to this question. Because this person asked, what is the implication of this tax reform for NGOs who are VAT exempt? Okay. Okay, I think we've addressed that. Unless there's any other question anybody wants to bring on, because like I said, looking at the Q&A box, most of the questions actually repeated. Okay, this is an appreciation of the Institute for doing this. Why is the VAT proposal generating so much controversy? Well, a very interesting question. And in fact, that is also the big game changer in this very reform. And I'll put it this way. When the conversation began, because some of us had inputs in what the committee also did, the first pushback on VAT, when we talk about also exemption from, tax for those either earning minimum wage or below 800,000, the pushback was mostly from the state government. Because the argument is that a lot of what they realize as tax revenue is from payee, and that at the state level, payee comes mostly from people earning 800,000 and below. And so there would be a loss of revenue for them, which was what now informed the federal government putting forward a proposal that VAT sharing formula under this new law will also be changed. So that 5% out of the portion of VAT that should go to federal government was now considered to state government. That's also part of these reforms. So which was why now the state governments supported the reforms. There was a pushback at first from them because they said 800,000 threshold will remove nearly all they recollect as payee revenue. So of course, to address that, there was that concession by federal government to shift a part of. So that was the issue behind the controversy this question was raised about. Okay, this is about sensitization. One of the attendees asked the question, how do we sensitize employees who are already agitated that they have to pay slightly higher without an increment in actual gross income? We have found a bit of relief in increased pension savings, but reduction in disposable income. I think what is most important here is to let employees see that the relief available is beyond rent, and the relief in this tax law is across, several other, provisions. So contributions that we make, health insurance, housing fund, and all of this, pension, they are all exempted. So you claim them as part of your relief, before your tax is computed, which means your income is taken, the reliefs are bundled together and deducted from your gross income before the tax rate is now applied. That's the procedure. That's the way it works. Okay. So, and I think that should address that question. Okay, I think this should go to our panelists because you are all HR practitioners. This one says, how should HR managers rethink employee value propositions in light of the new tax body on relief? As you may imagine, the reality of being a body to employees is more difficult to accept. So, panelists, let's make that the final word here. So I want to hear from you. How do we deal with this? Like one of our attendees asked. So over to you.
Okay. Can you hear me?
Yes, clearly.
Okay, so I would like to come from compensation and benefits because I am in the forefront of experiencing this tax reform. So yes, it's true that in practice there is some form of effort reward imbalance where employees are now feeling, especially the senior employees earning higher, where they're now feeling like they're richer in paper, but in reality they're poorer. So what it then means for organizations, for us as employers, to go back to the drawing board and have an active strategy that would protect employees' net payouts. They have to come from the way salary structures would be designed. We'll have to bring in non-monetary incentives, maybe deferred payment like long-term incentive. And then when all of these things are done, you have to communicate promptly and timely, not assume that they would understand these benefits. When you communicate, it will also improve trust. Now, also employees have a role to play. Some of them know of this relief, but they don't understand how to effectively cash into this relief. So we have to consistently communicate on it. For instance, the senior employees who have mortgages are not even aware that they can use the interest portion to sensitize in that aspect. If you have whole life insurances, the premium, like you said earlier, we can also use it to reduce your taxes. Additional voluntary contribution, the National Housing Fund that is paid to Federal Mortgage Bank of Nigeria, all of those things can reduce your taxes, but doesn't necessarily mean that it is increasing your take home. It's going to be a deferred payment, because even if I'm doing additional voluntary contribution, I don't get the money today. I'm doing NHF, I don't get the money today. So let's be clear, let employees understand that whilst you are doing this and it's looking like there's a reduction in your taxes, the money is not immediately coming to your pocket, because what you find out is that, but you HR, you said if we do this, our taxes reduce, but we're not seeing the income. So it's because there's no form of clarity. And at every time that there's payroll design that needs to be done, salary reviews that needs to be done, it goes beyond just salary increases. Tax planning is efficient. You don't want to, in the past, you do 10% increment on the employee's salary, and then there will be a marginal increase. For now, for senior employees, there's going to be a disproportional impact in their effective tax rates based on the increases that has been done. So what employers need to check whilst checking for cost sustainability is to say, oh, these increments that we used to do before, can we up it a bit, just so that when we increase salaries, there's no hesitation in, should I be doing more at work? Should I take additional workload? So that employees will feel this, and there's good succession planning, leadership pipelines will not die off, and then performance culture is not eroded. You don't want to say, after all, at the end of the day, if they increase my salary, my net salary will reduce. So why am I working and killing myself? So all of these things are what the employers really need to focus on, whilst the employees will then support us. So in response, all of us have a shared responsibility, and it's how we respond that will make the difference with this tax reform. Thank you.
Thanks for Google. And maybe just to layer on that, and you're right, completely right on the communication. There needs to be a serious change management strategy that every employer should embark upon. We should have all started in November, December, so that as we're in 2026, we're actually implementing. It is not, and even though the tax relief on health insurance is there, but it's about communicating. Let us be sure that our staff understand. Let us educate them. Tell them what it means. Even though the money looks like it's shrinking, but we've helped you put it in savings. It's like a deferred savings, long-term saving plan that we're encouraging people to do. So it's a mixture of communication. It's a mixture of employers being more transparent. It's a mixture of understanding, and it's a mixture of just seeing that it is not about the money that you take home at the end of the day, even though it's the hard reality, but it's also about, can the business actively support all of what we want to do? But everybody has to do it together. So in as much as you're doing that to ensure that you put out your best as employees, the employers also have a duty. So all of us will go back into our thinking room, re-strategize, replan, restructure, and aid where we need to provide aid for our employees. Thank you. Prof, are you still on?
Well, I'm not sure that he's still on.
I don't think he's still there.
Thank you very much to all our panelists and to our moderator. So thank you very much to all moderators. We'll come back to saying the proper thank you to you, but we are appreciative of the time that you've taken to share your knowledge and your expertise on this particular theme, the impact of the new tax reform on the cost of doing business in Nigeria. I'm just going to run through a couple of announcements. Don't log off yet. At the last count, we're about 2,100 on the Zoom, and I'm not sure how many are on the YouTube. So round of applause, we clocked over 2,100. Thank you very much. Please do not drop off. We have a couple of announcements that would benefit all participants, similar to what you're enjoying today or what you've already enjoyed today. So we have coming up our 57th AGM, our annual general meeting for our members. It's fast approaching, and that's in May. Sometime in May, the date will be confirmed. But in order to be eligible to vote and be voted for, please do pay up your membership subscription. And the details are all also on our website. You can pay your subscription through the website, and we'd actually advise you to pay through the members portal, because it updates your records immediately. And that's also actually important for those that are looking to take advantage of the CIPM, CIPD mutual recognition of certification, and of the one we have with Canada, the CPHR. So please, if you're not up to date, don't be shocked if they come back to you from CIPD or from HRP or CPHR telling you that you're not a member of CIPM. If you have not paid your dues in 2026, the portal would not recognize you for that particular purpose. So just to mention that, because I've had a few calls surrounding that. Also, you need to ensure, for those that are looking to contest or lead, aside from your subscription, your human resource practitioner's license must be valid and up to date. It shouldn't have expired. And so if you're looking to renew your licenses, you can renew by registering. Aside from the work experience mode, there are two ways in which you can renew your license: the work experience and also the competency assessment. So the next competency assessment is scheduled for 14th March 2026 at 9 a.m. And that is an online assessment if you're going to be going through a competency assessment test. Registration deadline is 7th of March 2026, and the details to call are all being shown on your screens. We have coming up the CIPM, the third CIPM International Academic Conference. So the CIPM Academic Conference is in collaboration with the University of Lagos, and the theme is Artificial Intelligence in Academia, Industry and Government, Navigating Ethics, Innovation and Impact. Tuesday 2nd to Wednesday 3rd June 2026. We are also using this opportunity to notify you that a call for papers is also open, and this conference is targeted and designed for HR professionals, academics, industry leaders, policymakers, tech professionals, civil servants, public office holders, postgraduate and undergraduate students, and entrepreneurs. Kindly email academicconference@cipmnigeria.org for more information. Our 2026 training calendar is already out. It's been out since last year before the conference and is available. And our training program in CIPM would commence in March, which is just a few days away. We offer in-house corporate training, virtual training, physical classroom trainings. For further inquiries, please contact us via learning@cipmnigeria.org. You can also visit our website to download the calendar and plan your sessions. We look forward to welcoming you. And do bear in mind that we are a learning organization, and one of the mandates of our charter is that we continue to upskill and develop our members, and that is part of what we are doing within the mandate of the Institute. We have coming up the Global Acceleration Forum, call it the GET Forum, and that comes up April 20th of April to 24th of April 2026, and the venue is Hilton Cairo Grand Line, Cairo, Egypt. And the theme is Commanding African Growth, Leadership Capacity in a Global Economy. You have all been receiving emails. The flyers are out there. It's on our social media platforms, but we encourage you to please get in touch, as is being displayed on your screen and on our website as well, and register yourselves and your team members for this forum. We are in collaboration with the organization putting this together, and the president and chairman of the governing council, and actually myself, we were one of the speakers at the forum. So we look forward to welcoming you to Egypt as well. If you want to place adverts on our websites, kindly visit marketing or email marketing at cipmnigeria.org. We are actually getting quite a lot of hits on our website, and it's a great opportunity for you to advertise your services, your products, and anything else you may have. Kindly do that. I mean, if you can see from the amount of people that are attending even our virtual programs now and our conference in Abuja, we are a very good place for you to market what you do and what you do so well. Membership upgrade. If you're due for an upgrade to full membership, please email upgrade applications at CIPMnigeria.org. The accelerated membership upgrade option is also available for those that qualify, and all the details are on our website. Kindly contact the Institute if you have any issues, any queries, inquiries, you need any help in regards to that, your membership, your subscription, or any other issues that you may want to raise with us at the Institute. The customer care line is 0810 1255 917, and that's quite important to us as an institute. We are open to you contacting us and actually ensuring that we are providing and delivering an excellent service to you as our members and even non-members alike. And the email address is also there, contactcenter@cipmnigeria.org. If you've not been receiving communication from CIPM, or you have recently changed your email address or any of your contact details, kindly, either as a member, please go online to the membership portal and update your details. We have a user-friendly members web portal. I would advise, and we would advise that you do that. Failing that, you can send your updated details to subscriptions@cipmnigeria.org. But in this age of technology, we would prefer that you actually do that yourself. And so that is actually actioned immediately. And this is also important because of the AGM coming up, so you don't miss any information surrounding how to vote, any other information regarding being voted for, and all other information that may be emanating from the Institute in regard to all our activities. Membership subscription and welfare scheme. Kindly ensure that your subscriptions are up to date, paid up to 2026. We're already almost in the third month of the year, so please kindly ensure that you update your details. We have a CIPM WhatsApp group. Join the CIPM WhatsApp group. It's strictly for CIPM members, so you'll be contacted and you'll be able to check the WhatsApp group for the registration link, and further details will share that with you. CIPM Marketplace is also up and running. You can shop for your items at discounted prices through the CIPM Marketplace. Kindly take advantage of these exclusive offers. We've already talked about the 58th International Conference and Exhibition, and that is coming up again on the 21st to the 24th of September 2026, and it's going to be in Abuja. So we look forward to welcoming you to Abuja. Kindly register. The registration desk is open. We have the CIPM 2026 Inter-University Quiz Competition. Registration opened on the 16th of February and will be closing on the 31st of March 2026. Tertiary institutions are invited to nominate undergraduate students in human resource management, management sciences, and social sciences to participate. There are details on the quiz competition at cipmnigeria.org. The CEO, CHRO, HRD, Director General, so we're not just for private sector, all our leaders in the public and private sector are invited, will be invited to join us at the next forum that would happen in July. So we encourage our members to actually invite and register your CEOs, your MDs to attend this free event. We have the details as well for you to register. Host your next event at the Institute. We can host your events, your training sessions, your small parties, group outings at the Institute. We have our halls open and ready for you to book a space. Kindly call +234. The details are actually on the website, so for you to ensure that you're able to book the hall for your use. Thank you very much for listening to us, and we invite you to listen to the chairman of the Public Policy and Advocacy Committee, Dr. Arabi, FCIPM. That's the chairman of the committee that put this program together, as I invite him to give the vote of thanks. Thank you. Dr. Arabi, over to you, sir. Dr. Arabi, please, can you unmute yourself? We're waiting for you. Dr. Arabi. Dr. Arabi? Okay, please do not go. We need to thank you for actually taking the time to actually do this. And we also have a plaque presentation as well for all our moderator and panelists. So whilst we're waiting, kindly enjoy this video and just give us a minute, please. Dr. Arabi? Okay, please do not go. We need to thank you for actually taking the time to actually do this. And we also have a presentation as well for all our moderator and panelists. So whilst we're waiting, kindly enjoy this video and just give us a minute. Okay, Madam Vice President, President is still online, would like to present the plaques and as a measure of appreciation whilst we're waiting for the vote of thanks to our distinguished moderator and the 4 panelists. So would like to present, they're here with us in the room, in the council chambers. So we'll just display them so you can see. Mr. President, sir, are you there?
Madam C, please have the Vice President present the plaques to the participants, and then she can take the closing remarks right after. Dr. Arabi is not available, please.
Okay. So, the Vice President of the Institute, Mrs. Chidima Obejesi, FCIPM, can I invite you to please do us the honors of presenting the plaques to distinguished moderator and the 4 panelists, and thereafter take the vote of thanks and closing remarks together in one. So quite a big task ahead of you. Thank you, Madam VP.
That's fine. Thank you very much, Madam C. It's been an interesting session so far. I mean, I've seen a lot of comments. I'm actually talking so that you can show the plaques, like you said. Good afternoon, distinguished gentlemen and ladies. I want to say thank you all for joining this call. Over 2,000 participants. Wow, that's a great one. And it's been interesting listening to our panelists and speakers talk us through the tax reform system and its impact on doing business in Nigeria. Thank you, Professor Biodun Adedipe, for the insights you brought. Very, very helpful. Thank you also to our own Professor Uche Owaleke. God bless you. I mean, you helped us go through the tax law and its applications. And I'm sure that most of us here are better enlightened now. Thank you, Mrs. Joan Wuya, MCIPM, for the insights you brought. Normal HR persons, God bless you. We appreciate that. Mrs. Omowumi Mabel Adewusi, MCIPM, Mrs. Ogogoa Imamoke, ACIPM. Thank you so much. All of you did so well. And I have learned so much about the tax reform system itself than I know before now. God bless you. So on behalf of our institute, on behalf of the president and chairman of Governing Council, on all leadership, both present here and not, and members of our institute, Professor Biodun Adedipe, thank you. I present this flag in recognition and appreciation of your contributions as the moderator. In fact, you did more than a moderator. That was a keynote speaker. Thank you. You did the job of a keynote speaker by your presentation and laying the background on which we were able to dissect this topic. Thank you so much, sir. We really appreciate the knowledge and insight you brought to this whole roundtable discussion. And thank you so much for your dedication to advancing this dialogue. Thank you, sir. God bless you.
Amen. Thank you, ma.
Yes, sir. Can we go on to the next person? Okay, Professor Uche Owaleke. In fact, he said something at the closing. He said CIPM should begin to advocate for how these monies will be used now when the revenue comes in. How would it be applied? How would it be implemented? Yes, we are interested in that because anything that concerns people, CIPM is interested. Thank you, sir. And we present this flag in recognition and appreciation of your contribution as a panelist. Thank you, sir, for coming to join us today and for sharing those insights that has been very helpful today. We appreciate this, and we do hope that we can always come back to you, always, whenever we have discussions like this, because I trust that it will not end here. Thank you very much, sir. Next flag. So also Ms. Joanne Wuya, MCIPM. Ma'am, you did justice to all the questions, and I'm super proud of you. Thank you for breaking it down, the way the employees feel it in our organization and how the impact it has on our businesses, because that is the crux of the matter. We appreciate that so much, ma'am. Mrs. Joan Wuya, MCIPM, I present this to you on behalf of our institute, our leadership, and entire council in recognition and appreciation of your contribution as a panelist. Thank you for your dedication to advancing this dialogue. Thank you, sir. God bless you. Mrs. Omowumi Mabel Adewusi, MCIPM. I present this to you on behalf of the President and Chairman of Governing Council, on behalf of the Planning Committee, the entire members of CIPM, in recognition and appreciation of your contribution as a panelist. Thank you for your dedication to advancing meaningful dialogue in people management, always and every time. Thank you so much. We appreciate the time you shared with us here and the insights. Thank you. Next. Mrs. Ogogo Emamoke, ACIPM. I present this to you on behalf of the President and Chairman of Governing Council, the entire members of our CIPM, the Planning Committee, and everyone, in recognition and appreciation of your contributions as a panelist at this roundtable discourse today. Thank you for your dedication to advancing meaningful conversations in people management. Thank you. We do hope that We can call on every one of you in future, and then you will be here to share more insights. I also know that the participants will want to ask more questions. I trust that they can reach out and you can give them more insights on how to apply this and walk us through this whole exercise. Thank you so much, ma'am. Having said that, it is my pleasure. It is my pleasure to thank all of us. Good afternoon, everyone. The President and Chairman of Governing Council, all leadership and council members on the call, ladies and gentlemen. As we draw this insightful roundtable to a close, I want to sincerely thank every one of us, our distinguished panelists, and participants for the depth of perspective shared here today. From this dialogue, it is clear that the new tax reform represents both a challenge and an opportunity for businesses in Nigeria. Today's discussion has highlighted the delicate balance between government's needs to generate revenue and the private sector's drive to remain competitive and sustainable. We've heard several perspectives from concerns about increased compliance costs to optimism about the potential for a more transparent and equitable tax system. In the words of John F. Kennedy, the best road to progress is freedom's road. Today we have freedom by the knowledge we have. In this context, progress for Nigerian economy will depend on how well we can align fiscal responsibility with business growth. There are several key takeaways for me. One is adaptation. Adaptation is essential. Businesses must innovate, restructure, and communicate to absorb the impact of higher costs while staying competitive. Collaboration is also critical. Government and the private sector must work together hand in hand to ensure reforms are implemented fairly and efficiently, and also transparently. Long-term vision matters. As Mr. Drucker reminds us, the greatest danger in times of turbulence is not the turbulence itself. It is to act with yesterday's logic. We must now begin to think forward. In closing, I encourage us to remember that while reforms may be disruptive in the short term, they can lay the foundation for a stronger, more resilient economy. The true measure of success will be our ability to transform these challenges into opportunities for sustainable growth. On behalf of my beloved institute, the Chartered Institute of Personnel Management of Nigeria, I extend heartfelt appreciation to everyone who contributed to today's session. The panelists, our dear committee members led by our own Dr. Arabi, thank you for putting this topic together, this roundtable, the first of its kind for CIPM. Thank you. Let us leave here not only with concerns, but with renewed commitment to engage constructively, adapt proactively, and champion practices that will keep Nigerian businesses competitive in a global economy. Thank you once again for your time, your insights, your participations, the knowledge shared, the knowledge gained, over 2,000 of us. Although I see some people say I joined because of the points. You may not have gained points today, but my sister, my brother, my dear colleagues, you have gained knowledge, you have gained insights. And like the CPC chairman says, what you learn, nobody can take from you. That's the interesting thing. We look forward to continue this very important conversation in the future. Thank you all. And may today's dialogue inspire actionable strategies that benefit both businesses and our society at large. Thank you, everyone. Do enjoy the rest of your day. As I say, at CIPM, we deliver value through people. Long live CIPM, long live Nigeria. Thank you.
Thank you,
Madam
Madam.
Registrar, over to
We are
you.
also thanking HQ staff on your behalf.
Thank you, HQ staff, the IT, the media, everyone. Thank you for Governing Council member for even approving. Thank you, every one of you. And HQ staff led by the registrar. Thank you. You did a good work coordinating.
Thank you, Madam VP. And whilst we're trying to log off and actually take national anthem, please, there are discounts available in regard to our 58th International Conference and Exhibition Please access those early bird discounts. Very important. Don't allow the tax to take all your money. Enjoy the discount that is being offered as well. Yes, and for those that have attended and you have registered to attend this webinar, you'll be sent the webinar recording via email. That's if you've registered. And you can also watch these on the CIPM YouTube page. So watch out for your emails. And for those that are going to be using this for your HRPL points and for your membership upgrade, we will not be issuing a certificate of attendance. So when you get your thank you for attending email, kindly screenshot and save it. That would be your certificate. And whilst we're trying to log off and actually take that, thank you very much. We're taking the national anthem. The third stanza would be our prayer, O God of creation. And then this is over. Thank you very much for attending. And we look forward to seeing you very soon at our next event. National anthem, please. Thank you very much, everyone, and do enjoy the rest of your day. Thank you.
Everyone. It's been a wonderful time.
One thing I'm taking away from this place.
Thank you, everyone, all the way from USA. Bye.
Politics.
HR is no longer a dumping ground. We are re-imaging the world of work.
Particularly regarding the Gen Zs, particularly regarding remote working, how HR officers should navigate this idea of remote working and flexibility in the workplace.
You have so many speakers talk about the dynamics of managing humans, all right, integrating HR with the business and ensuring that HR has a seat at the table and ensure HR is carried along a discussion to empower, to ensure the business achieves the business goals.
The 57th National Conference has been an exciting one, with the topic reimagining the new world of work.
One thing I'm taking away from this place is the issue of office politics.
HR is no longer a dumping ground. We are re-imaging the world of work.
Particularly regarding the Gen Zs, particularly regarding remote working, how HR officers should navigate this idea of remote working and flexibility in the workplace.
You have so many speakers talk about the dynamics of managing humans, all right, integrating HR with the business and ensuring that HR has a seat at the table and ensure HR is carried along a discussion to empower, to ensure the business achieves the business goals.
57th National Conference has been an exciting one, with the topic Reimagine the New World of Work.
One thing I'm taking away from this place is the issue of office politics.
HR is no longer a dumping ground. We are re-imaging the world of work.
Particularly regarding the Gen Zs, particularly regarding remote working, how HR officers should navigate this idea of remote working and flexibility in the workplace.
We had so many speakers talk about the dynamics of managing humans, all right, integrating HR with the business and ensuring that HR has a seat at the table and ensure HR is carried along a discussion to empower, to ensure the business achieves the business goals.
The 57th National Conference has been an exciting one, with the topic Reimagine the New World of Work.
One thing I'm taking away from this place is the issue of office politics.
HR is no longer a dumping ground. We are re-imaging.
I'm proud to say on behalf of your leadership that we did not just aim high, we soared. We have lifted the institute, lifted its people, and lifted the standard of excellence in ways that will echo for years to come. As I often say, a title is not just a badge, it is a torch. Carry it boldly, let it blaze, and light the way for others to follow. Because leadership, my friends, is not about holding a position. It is about igniting a movement, sparking transformation, and setting the world with possibilities.
Today, the Office of the Head of the Civil Service of the Federation regards the Institute as a vital partner in the execution of its landmark reforms. One of such is the collaboration with the service in the implementation of the performance management system, a key feature in modernizing and streamlining performance evaluation processes in the service. Ladies and gentlemen who are here, who are specialists in human resource management, what should the role be? I think that in today's rapidly evolving world of work, artificial intelligence and digital technology are transforming not only how work is done, but also where and by whom it is done.
I'm proud to say on behalf of your leadership that we did not just aim high, we soared. We have lifted the institute, lifted its people, and lifted the standard of excellence in ways that will echo for years to come. As I often say, a title is not just a badge, it is a torch. Carry it boldly, let it blaze, and light the way for others to follow. Because leadership, my friends, is not about holding a position. It is about igniting a movement, sparking transformation, and setting the world with possibilities.
Today, the Office of the Head of the Civil Service of the Federation regards the Institute as a vital partner in the execution of its landmark reforms. One of such is the collaboration with the service in the implementation of the performance management system, a key feature in modernizing and streamlining performance evaluation processes in the service. Ladies and gentlemen who are here, who are specialists in human resource management, what should the role be? I think that in today's rapidly evolving world of work, artificial intelligence and digital technology are transforming not only how work is done, but also where and by whom it is done.